What's the name of the fund? What does it seek to do? And what's the size of the fund? That's as a general opener. And maybe possibly whether you invest domestically or locally. So Solomon, I'll start with you from the other end.
But we were established with $250 million US, funded by the government. And our mandate is to focus on investing in infrastructure in Ghana only. Our mandate is relatively broad. We can invest equity, debt, and anything in between. And our sectors are also quite broad. We group them into two main areas: economic infrastructure and social infrastructure. Probably in the first year or so, been focusing more on economic infrastructure, but we can also do social infrastructure. So economic infrastructure, the stuff that you can touch and hold, airports, ports, roads, bridges, things of that nature. And then the social infrastructure, health, education, those things we can also do as well. We are in a slightly different situation than other sovereign wealth funds as well. Sovereign wealth funds normally get allocations on an ongoing basis from their country. The Minister of Finance has decided that $250 million, at least initially, we should stand up on our own 2 feet, and we will raise additional funding from the private sector or international markets over a period of time. So that's just briefly the Ghana Infrastructure Investment Fund. I can tell you a little bit later what we've been doing over the first year of our operation.
Thank you very much. Mamadou, I think there's a mic next to you. Tell us about the fund you manage, size.
FONSIS is an initiative from the government of Senegal. Really, it's a strategic investment fund. The idea being to use public money to invest into the strategic development of the country. The fund was incorporated with a commitment from the government to transfer to it $1 billion USD. And really the idea was initially very ambitious. It was to say that the government has a lot of assets actually, which are not managed optimally. So why not put together a team of professional investment managers to actually help it manage it more efficiently? And in so doing, you can create entities which are going to be credible by themselves and whose credit worthiness is going to be separated from the sovereign. So initially the idea was to put most of the public asset into that entity and create this investment manager. In so doing, basically the ambition was downsized a little bit, and so we ended up creating a strategic investment fund with a $1 billion commitment. What we're doing today is basically leveraging public money to attract private money, and in so doing, we basically use that ratio of public money versus private money attracted as one of our objective criteria, saying that when we invest, for example, $1 million into a project, we try to attract strategic investments in the tune of a few $1 million, and we try to also raise money on the back of that project, and not really money which is benefiting from a sovereign guarantee, which would be basically in some ways accounted to the public accounts. So in so doing, we have been able to create multiples by 1 to 15 in most of our projects, meaning if we put $1 into a project, we track $15 money. And those are the kind of ratios which are very interesting to actually push forward. The traditional model was for the government to basically fund it all. Now we try to use public money, which is scarce, as a leverage really to build strategic partnership and attract private money.
Let's come to Nigeria. So, Kola, if you can just give us a sense again, as we said, the same format. what the funds are about, and of course, I'm sure you're happy you are number one.
The Nigerian Sovereign Investment Authority actually has a mandate across all three kind of funds we mentioned. So we actually have a stabilization fund. Okay. We also have a future generations fund, and we have an infrastructure fund that is focused solely on infrastructure in Nigeria.
Wow.
The size of the fund, the government initially seeded the fund with $1 billion. Subsequent to that, there have been additional contributions. And right now, we have about $1.6 billion. We also just got a new investment commitment from the government of another $650 million 2 weeks ago. We run a stabilization fund to provide some cushion for the government in times of economic stress. So Nigeria is a very oil-dependent country. When oil prices tumble like they did 2 years ago, the government's situation is quite stressed. And the idea behind the stabilization fund is to be able to provide that cushion. The Future Generation Fund says that in 50 years, Nigeria will run out of hydrocarbon reserves. What do we do then? The Norwegians have $1 trillion in their sovereign wealth fund because they've been saving all this money all this while. So we have the Future Generations Fund trying to do something like that. But there's also at the same time a large infrastructure deficit in Nigeria. And you're never going to get the country to be a developed country or to industrialize if you don't have critical infrastructure. Hence, we have the Nigerian Infrastructure Fund that invests in commercially viable infrastructure projects in the country. They have to be commercially viable. If there are projects that are not commercially viable, that's for the government to do. Commercially viable projects we look at to also, similar to the Senegalese fund, to look at ways in which we can bring in foreign capital or private sector money in general to participate in infrastructure, structure it well, participate and ensure that there are commercial returns for investors. So these are the three main focus areas of the...
Is it possible to give us a sense of which percentage is into the long term, which percentage is in infrastructure, and then for stabilization?
Okay, so historically, we have had 20, 40, 40. 20% in the stabilization fund, 40% in the Future Generations Fund, and 40% in the Infrastructure Fund.
The initiative of creating Rwanda Sovereign Wealth Fund came from a national dialogue, the government with the citizens, where the government gives accountability to the citizens. Through a 2011 dialogue, the government came and gave its accountability, and in that dialogue, the citizens' question said, what can we do? Then that's when the initiative or the idea of saying, can we create a sovereign wealth fund? Of course, everyone laughed, said, okay, we're already struggling with the budget. How can you create a sovereign wealth fund? But again, in the same discussion, the idea came, can we share the burden? You chip in and the citizens chip in. And that's how the idea came in. 2012, the institution was put in place under the Act, the Trust Act. And today, as we stand today, we are a total asset of $50 million US, and it's more of citizen contribution to government contribution as we go on. Of course, everyone will be asking how the citizens came about to agree on that. The principle came in, as the moderator mentioned, about once you have eaten and you have enjoyed the food, you can sit to discuss, and your ears are more listening. So that's how it came in. Once the citizens enjoyed the governance and the accountability of the government, then the government brought the idea and everyone sat down and the idea of contributing both government and the citizens came in. I think I'll go about detail a bit later on.
Thank you very much. So Kelvin, for you, we need you for two reasons, not just the Singaporean experience, but we know you're an expert on Asian sovereign wealth funds. Give us a sense of the size of the Asia sovereign wealth fund market.
My experience from partnerships to then at the IFC showed me also how you can leverage DFIs to work, to create and mobilize more funding at the local level. So when I was in the IFC in Singapore, we wanted to do infrastructure. But how did we convince a DFI like the IFC to put the headquarters of their global investment function from DC and shift it to Singapore? So that was, we leveraged two pools of capital within Singapore, one within the GIC, one within the central bank to be the anchor LP. And in that anchor LP, as just you can request for a preference arrangement, we ask for the global head to be based in Singapore. I think what is very, very, very important as African funds grow is you cannot run away from the issue of human capital. I want to stress upon that time and time again. When you are a fund, you are playing at the global level. You're talking about rules and governance. So the people that accompany the funds are very, very important. Last but not least, I was from the Central Bank of Singapore, and there is that linkage between how we have deployed our $400 billion of excess capital into the Government of Investment Corporation. And in that time, we managed a $1 billion fintech fund meant to grow the financial sector. So I prepared actually in the plane, which was 24 hours to get here, a little bit of set of slides that you can see to your right, to your left. I would say that when we think about sovereign funds in Singapore, we should think about it in terms of sovereign liquidity, what the liquidity pools would achieve in terms of returns, which is why I felt it was important to also put into context, especially in Africa's development, the social angle, because every time we've come to Singapore, to Africa, this is some research I did to show how we have grown. We own not just local champions, but global champions. Bits and pieces of Standard Chartered, 16%, Visa, 4%, Singtel, etc., etc. But I'll stop there.
Kelvin, thank you. Investment. Looking at our development trajectory, what would you urge African sovereign wealth funds to focus on more? Because I think you alluded to something to say, if you invest in your economy and diversify it, then the insecurity that even leads to stabilization needs is not even there. So two things. Talk to us about how African sovereign wealth funds can increase their size to be bigger, and also give us a sense of what your report said about whether to keep the money for the future or invest now. Knowing all the controversy in Ghana within the past week, you get my point.
Okay,
great.
Thank you. This is quickly. I mean, I think that the important thing is for countries to use the democratic process to be able to decide what it is that they want their funds to focus on. The three common mandates that we see sovereign wealth funds pursue, stabilization, future generation savings, and domestic investments, are actually all important. So it's okay to have a triple mandate or one of the three. But from a transformation argument point of view, which is one of the arguments we've tried to push in a report, is that the kind of cyclical downturns that necessitate the establishment of stabilization funds in the first place can be dealt with in other more structural, long-term structural ways. And typically, if you're diversifying your economy and investing in diversification more aggressively, you then are able to build a more resilient economy that then is not prone to these. So there's an argument. Do you build a stabilization fund and continually deal with recurring cyclical downturns, or should you use that money to structurally cure the inefficiencies in the economy? Over the next 10 years, I want to build a $10 billion fund. And then you asked, what would it take to get there in 10 years? If that means growing a fund by 1 billion every year, think outside the oil box, think outside the commodity box. There are all kinds of ways of accumulating resources to be able to build these funds. And in the report, we outline a couple of them. But countries will need to make a specific commitment and stick to the commitment.
Fantastic. I have one final question for the panel before we take possible comments and then hear from the Vice President. So I'll start with you, Solomon. So you are Investment Infrastructure Fund. What is your transformation mandate? Or are you just to choose different infrastructure projects and invest, or did the law come with a certain economic transformation mandate? And the point two of that question is, how independent is your fund management from quote-unquote political capture? Because the report, I know the government is here, but you tell us. How independent is fund management from political considerations? So you have a two-in-one question, you have 2 minutes.
Let me keep it simple. As I said, we've got $250 million. The government has made a strategic decision that we will have to go to 1 billion or 2 billion, but I cannot go back to the Minister of Finance to get that money. I have to raise it from international markets, which means that the $250 million has to be spent very wisely, very productively, and with returns, so that an outside investor will say, I'd like to put some money into that, which governs the whole way that we operate. We're fortunate in that we are part of government, but we do have a degree of independence, which I think future potential investors will require on the Ghana Infrastructure Investment Fund. So we have a fund, where a board where there's no politicians involved, but we have an advisory committee that sits on top of that, where the chairperson is the Minister of Finance, and the central bank governor is also on that board. So I argue that we have the best of both worlds. We have access to the highest levels of government when we need to unblock problems, which anybody doing infrastructure projects in an African countries knows you need to have close contacts with government. But we have a degree of independence in our investment structure through our board, who's not made of politicians. So I think we've got it just right.
Great. Mamadou.
What we tried to do in Senegal was, anyway, inside the Ministry of Finance, explain to high-level politicians, civil servants, that creating a sovereign fund is a very good play for the government itself. It's a way of leveraging its own assets. And it's making it stronger. It's not taking something from him. And when you streamline that the right way, you create a new capacity of capital raising, which is linked to the state, but not accounted in national accounts. And that's what was done very well with in Singapore with Temasek Holding. When you look at Temasek, the rating of Temasek is that of a state of Singapore. And it's an entity which has the same credibility as a creditor in the markets as its sovereign state. It's the same thing for Mubadala in the United Emirates. So the idea is, it's one of the ways of leveraging public asset. And that's something that can be very effective if it's done at the right scale. The right scale being, every type of public asset which can be monetized can be used as a leverage. That's why, you could build a huge fund in Nigeria that can have very immediate impact due to the size of Nigeria. But even in Senegal, we can build a very big fund. And coming back to the earlier presentation about the size of the funds in Africa, it's really something that we have to and these type of events are very good for that, to explain the fact that this is a way for governments to leverage their internal power and to be more effective attracting or raising capital to fund their economies. We can do that on a very structured way using the realities of an international economy.
Kola, in Nigeria, how independent is the Nigerian Sovereign Investment Authority from political capture? And number two question, if we rank the oil producing countries in the world, you are among the top 8 or so, but if you rank the top sovereign wealth funds in the world, you wouldn't be among the top 10. So clearly, even though you have a lot of oil resources, if we compare you to some of the Emirati countries, your fund is very small. Why is that?
Okay. In terms of the first question, in terms of independence, we have an independent board of directors. Yes, the board is appointed by the government, but the board is actually completely independent of government. They have to take cognizance of what the government is trying to achieve in the economy and how they're trying to, especially for the infrastructure fund. But in terms of government interference in what the NSIA does and what project or not project it invests in, there is no government interference. So we are independent. As regards your second question, people say Nigeria is an oil economy. We produce roughly 2 million barrels a day. We're about 180 million people. Per capita, we're not really an oil economy. If you take the Middle Eastern countries that have population sizes of 2, 3, 4, 5 million people and produce even more barrels per day, we do not qualify, really speaking, as an oil-rich country. We have some oil, but we also have a lot of immediate needs. And that has been the tussle. The tussle is, do we spend now on trying to ensure that the population currently, right as it exists right now, is happy? Or do we save for the future and try and build infrastructure for the future?
Was there an argument about that in your country? Because in Ghana, it was a big argument.
It was a big argument for us as well. I think, and there was actually pushback against setting up of the NSI in the first place. The onset of the oil price crash in 2015, 2016 emphasized to everyone and made it very clear why we should have been saving in the earlier years. And I think that actually helped us significantly, and because it made a strong case of why the NSI should exist and how it will help diversify the economy away from oil in the long run. It's a long battle, but we are on track.
Okay. Final one, Patrick. So you are impressive in the rankings. You are number 2, but the size of your fund is very small. I mean, let's be honest. So Rwanda has a big name. You're doing a lot of great things. What ways are you thinking of diversifying to increase the size of the fund? Because you are non-natural resource. Are there any other things you're considering in the future to make this a more robust and sizable fund?
Thank you. Sure. I think we realize that in order to make a difference in the economy, you must be big. And the current approach, the current mechanisms that we have is not making us to move faster. Currently, we are in negotiation with the government to look at the way of taking in control, managing the government investments across. So that's what we are in the progress, and that's what we believe that once that responsibility is given to us, I think it will help us leverage better and to be able to grow. But not leaving also that aspect of the continuity. When I mentioned about the contribution of government and the citizens, the concept was 0 to 1% of the basic salary to the working population. Individually, really doesn't, it's not much. But when you multiply to the population, it makes a difference. That's where the idea came, and that's how it was bought. So thank you.
Great. I would pause and take 2 comments from the floor before we take the speech. Is there any pressing question or comment?
You raised an interesting point about credit rating and credit enhancement of the sovereign wealth funds. Could I ask, do any of the African sovereign wealth funds have a credit rating better than the sovereign from any of the 3 large credit agencies?
So that's to Michael.
Nigeria is a good example. And then you compare it to a fund like the Botswana Fund, that's essentially a future generation saving funds. They have a fairly good track record of very credible investments. So of course, they're doing a lot of equity investments and partnerships with a lot of companies all over the continent and outside the continent. What is not very clear is the extent to which they are leveraging this track record in the credit markets. Would like to see a lot more of that, but there's a bit of risk there. And I think given the size and a lot of these funds are fairly young, to begin to venture into credit markets and to begin to use credit instruments to raise financing can be a bit risky. So what we would recommend is that in these early stages, while they're still trying to build resilience, perhaps they should focus more on other strategic investment, approaches, other than taking on too much credit risk.
Thank you. Please put your hands together for my panel. So we had Kelvin Tan from Singapore, Michael Koto from Ghana, Patrick Marara Shayaka from Rwanda, Kola Owondomi from Nigeria, Mama Dumbaye from Senegal, and Solomon Sama from Ghana. Thank you very much, gentlemen. Please take your seats.